another episode of Coach Toya Live. I'm your host, Coach Toya. I'm a credit and financial coach who helps aspiring homeowners get their finances together and increase their credit scores. Tonight, we are talking taxes. Okay? It's one of those things that everybody has to do, and we know little about it. And I have to admit, I'm one of those people. I know just enough to mess my own up every year because I have a hard time finding somebody I trust to do mine. So that's the reason I'm doing this show tonight is we are going to talk to a tax professional and just learn everything taxes. Also feel free to comment your comments and it pops up so we're able to answer your questions. I definitely want to make sure that everyone gets an opportunity to get all of their tax questions answered tonight. So, with no further ado, how are you tonight?
I am great. I'm great. Thank you for having
I
me.
didn't want to mispronounce your name, so I'm going to let you pronounce your name.
Okay, it's Shamina Chanel.
Shamina. I wanted to call you
Yes.
Shamira. I don't know why, but I was about to do that. And I said, you know what? I'm not going to do that. Shamina.
Shamina, yes. I'm named after my sister and my mom, and my mom's middle name is Christine, so that's where the Mina comes in, and then my sister's name is Sharita, so it's a
Oh,
combination of
that's
those two.
neat. So everybody kind of, it goes together.
It does.
Wow. How did you get into taxes? Of all things you could do, taxes.
Ooh, so um I right out of college, I worked for a CPA firm,
Okay.
but I was a staff auditor. So we would audit like financial statements for governmental entities, nonprofits, corporations. Um, but there was a time where I needed to be home more for my family. And so I kind of got out of auditing and
Yeah.
I started a different type of auditing. So when I would meet all these different business owners, they would say, "Oh, if I just had someone to do my paperwork," is what they would
They
call it,
call
then
it.
I could run my business.
Yeah.
And so because I was doing a lot of bookkeeping, then people wanted their taxes prepared. So I really, really love taxes. That's my first love. But most business owners don't have proper bookkeeping in order
Yeah.
to prepare the tax return. So then I was having to kind of do the bookkeeping to get to the taxes. So that's how I got into taxes.
Gotcha. So tax season is about over. We've got what? Is it still the 15th? This or has it been
No,
extended?
it's extended till May 17th this year.
Oh gosh. Okay. So we've got time. What
Yes,
was the reason for that extension?
because they were trying to give the small business owners enough time to implement all of the changes that
Okay.
I think they changed it again like January the 29th.
Oh gosh.
Yes, because people were having to like pull out of their retirement accounts and then there's some
Yeah.
credits or they're waiving penalties for that. So just that the IRS could get their systems updated and the business owners could get their financial records updated to reflect those changes.
Okay, good, good, good. So I'm trying to think what's the best way to start? Because there's just so much to talk about with taxes. So I think we'll talk about individuals first because I think
Okay.
more the meat and potatoes of taxes are businesses. Am I
Right.
correct in assuming that? Okay. So for the normal everyday working person, I know we've kind of got different segments. You've got
Right.
the people that we always kind of joke about, the ones I wouldn't say joke, but we're a little jealous of them because they're those people that get those $5,000 refund checks every, you know,
Yes.
where does that come from? Because I've always wondered. There's no way you made $5,000 last year. So how are you getting a
Right.
$5,000 refund check? What is that all about?
So that is basically attributed to the earned income tax credit, if you know what
Okay.
that means. And what that is, my interpretation of it is it's the government's reward for you working, even if they work part time, even if they work half a year. Um, and it's the earned income credit is tied to children
Okay.
and the child tax credit. So the child tax credit is like $2,000 a year per child, and then the earned income can be I don't remember the exact number, but it dwindles down after you get to like 35, $40,000. But
Right.
you can have the earned income tax credit for up to three children. So when they get what the government does is, because you did not live off of the system all year, this is how we're going to reward you for working. But you can only get it if you work.
Okay.
So, but that means that you can only earn a certain amount of money to get that refund,
Yeah.
which means you can only live in a certain area in your town to get that refund. Your children can only go to certain schools in order to get that refund. You will eat certain foods in order to get that refund because you won't have
Yeah.
access to all of the things because you live in a
Right.
certain area and your income is low. So that's
So I
how
see
they,
where you're kind of going with this.
yes,
Yeah.
that's
So,
how,
and
yeah.
there's a certain age too. I think, is it what, 13 or so that you stop getting the child tax credit, or is that maybe the child care thing that I'm thinking about?
That's a child care
Okay.
credit. The earned income credit goes up until your child turns 17. So when they're
Okay.
17, you don't get it anymore. Well, the child tax credit is when they turn 17. You can still get earned income credit if your child is 18 or even up to 23 if they are a student.
Gotcha. But back to, is it safe to say, is this money coming from the government, or has it really been earned by these people who are getting it?
It has not, it would be money not, well, you get credit for earning income. So you didn't
Right.
necessarily
So
earn
the
that
government is
refund.
essentially paying,
Yes.
like we are as taxpayers, we're paying this.
Yes.
Okay,
We are
that's what I've
paying them.
always kind of thought. Because
Yeah.
then the interesting thing was, I remember when I, just starting out, I got that credit,
Yes.
and then I got a bigger, and then one year, I don't remember what that number was. I think I got a better job, and then I got nothing and started owing, and it happened just like that. And I went,
Yes.
wait a minute. So how do you tell? How can you prepare yourself for that? Like, is there a website or somewhere that you can go to and see what tax brackets that you're in for certain income so that you know how to prepare yourself for when that
Yes.
happens and you don't get anything anymore?
I know it's a shock. It's like taking a bullet almost. You're like,
Right.
oh, what happened?
I'm like, wait a minute.
Yes.
I thought I was good. I got off the system. What happened? Why am I
Yes.
now
Well,
being
and
penalized?
that's how they reward you for getting off of the system. I know. And
Yeah.
yes. So irs.gov is where I like to go,
Okay.
but it's their website is not that user friendly unless you know exactly what you're looking for.
Okay.
So you would want to look at the earned income credit if you're in that position right now. And then it'll tell you, like, for how many children, how much of a earned income credit you would get. But the more your income goes up, the less that credit is. So it'll start to dwindle down to nothing. Yeah. So,
Gotcha.
yes,
So what
yes.
about tax brackets? Like knowing what tax bracket you're in for your certain income. How do you figure that out?
There's also a table for that, depending on if you're married, single, head of household,
Okay.
and it'll tell you like if you earned in before taxes, it goes by your adjusted gross income.
Okay.
So you've heard the term probably AGI or
Yeah.
adjusted gross income. It's the number that everybody looks at when you're trying to get qualified for financing, to purchase a home, a car, business loan, all of the things. So that um, AGI is going to determine what tax bracket you're in. So at
Okay.
the end of the year, is it going to be 15%? Is it going to be 22%? Is it going to be 0%? So
Right.
that's a number that you want to look for.
Okay. And that's the other thing. When is it better for a married couple to file together or to file separate? Because I've heard that there's some controversy between when to do that.
Well, my favorite combination would be for one spouse to be a W-2 employee and the other spouse to be an entrepreneur, because then you can double dip, in my
Ooh.
opinion. So
Okay.
you can get all of the things that filing together would get. The only reason I think most people would file separately is if, like, say, maybe one person was an entrepreneur before you got married and they have a tax bill. So you don't want to take on that tax
Right.
bill. And your spouse probably doesn't want you to have to pay for that either. So you could file separately, but you don't get the best tax benefit when you file separately.
Okay. So it is typically
Yeah,
better to file together.
typically better, unless someone owes a big tax bill.
Okay. So, any deductions that people without businesses can deduct that they may not know about, like little things that's surprising or that you thought people would know, but you realize, and every single time you're having that conversation, like you can do this, and they're like, really? Is
Yes.
there anything?
There's not a whole lot,
Okay,
but but
and
you
we
can
talked
do,
about this.
yes, like you're like, there's nothing.
Yeah.
Well, and the reason is because the government fuels off of payroll taxes. So anything
Oh,
that can be taxed as payroll tax, like self-employment tax, income tax based on your W-2 income, that's that's where you're going to pay the most taxes. So, I mean, there's a few things you can do, like if you have first time home buyer's credit, your mortgage interest. But when 45 came in, um, if you were married, the itemized deduction went to 24,000, where before it was like 12,000. And so, if you had a house that costs like 250, $300,000, you could very easily have $12,000 in mortgage interest. So
yeah.
you could itemize, and then if you itemize, then it's real estate taxes that you pay. It's homeowners insurance that can go into the itemized. So you can easily get that number well above $12,000. But now it's harder because married filing jointly, the standardized or
Higher.
deduction is 24,000, and most people can't come up with 24,000 in itemized deductions. So, and then you can
Right.
do things like have energy efficient, put energy efficient windows in your home,
Yeah.
because the government likes to reward you for either saving on energy or um, energy and transportation is a big thing for them, or
Yeah.
like research and development stuff that
Stuff like
most
that.
most
Don't
individuals are
do.
not going to be into.
Right.
Yeah, so not a
Okay.
whole lot. The
So
goal
basically,
is
just
to reduce your taxable income.
and can you really do that if you're just a W-2 employee?
Not typically.
Okay. So
Yeah.
now I guess it's the fun part. So this is
Yes.
where you need a consulting business or a lawn care something. So what types
Yes.
of businesses, like how do you pivot into now I'm business owner? What type, when can your business be considered a business on your taxes? Like what kind of
Um,
things has to be done for that to happen?
Well, the first year you're in business, a lot of people get stuck on like, I need to file an LLC, which you do want a level of protection, and that just protects your personal assets against your business assets. But you don't necessarily have to have an LLC to be in business your first year. So you can, like people who did like DoorDash and Uber Eats or Uber, that's because you're not an employee of those companies, you're a contractor. That's when you can start taking advantage of all of the deductions and
Oh,
business transactions. Like now you might have to have a home office because you have to keep up with all of your receipts, and so very easily you can have a business without it being so structured like an LLC or an S corp. And if you have a consulting business, a lot of times you may spend money getting the LLC set up, getting your office set up, having a Zoom account now, and, all of the
yeah.
things that add up. And now you're using your internet from home to help run your business, and you can easily spend $3,000 to $5,000 without thinking about it. That can be a tax deduction for you even before you earn your first dollar.
So is there a certain amount of time where the government is going to look at how much money you're making on this business, or they really don't care. Like if every year, like for the last 3 years, I have had this consulting business and I have written off all this stuff and I've made very little.
Right.
At what point does the government say, well, maybe you need a new business because you're not making any money? Or do they not look at it that way?
They can look at it that way, and you've probably have heard people say, like you can run a business, or they may say it's a hobby if you're not making money in 3 years.
Yeah.
Yes. So that is a kind of a ground rule, but I know businesses that have been in business for 20 plus years that operate at a loss every year. And they have had no issues because you're still generating income, you're just still spending more than you're bringing in. Or, especially with consultant businesses, sometimes there's a lag in pay and the cash flow isn't there. And then by the time you do get paid, you've already incurred all these other expenses.
Yeah.
But if if there are things that can be red flags for the government, and so if that happens, you can get audited or go under review, and they may ask you, what are you doing to increase your earning potential?
So they send you that by letter, like a letter saying, what are you doing?
Well, they could send you that. I think one of my clients got a letter, but it just said because one particular year she had, like say $10,000 in legal and professional fees. Well, if you pay somebody like a professional to build your website, it's going to be $5,000 to $8,000 to build your website for you. So they wanted to see proof of that. and
Ooh.
and then it was the question, okay, well, you didn't really earn that much money this year, but you spent so much of your, basically from your W-2.
Yeah.
But the argument can be, it's an owner's investment. I could have gone to the bank and got me a small business loan and you wouldn't have thought anything of it. But since I am the investor and the bank is not the investor, then I can use my money however I please and I can run this business. As long as you have the documentation, they can't really say
Right.
you don't have a business. And then if they go on your website and see that it's a viable business, because our reviewer actually did. I went to your website and saw that, oh, wow, I see now that you do have a business. It is a legit thing because some people, some people will try it. They will say they have a business because they want to get the taxes lowered.
And not have any type of anything set up.
Nothing set up, nothing, nothing. They will
Now, have you
try
ever
it.
known anyone to get caught doing that? Like, what does the government do if that happens? If you are audited and it turns out you don't have a business?
I don't know anyone
Okay.
that has said where they've said you don't have a business, but I do know people that have been audited, and it was send me the proof of this. And one particular person, it was, oh, well, since you won't send me all of the proof, then I've got to add this back to you as income, and then we're going to tax that at this rate, and then there's going to be this penalty, and there's going to be these fees and this fine. And so
Yeah.
yeah, so I mean, it can happen, but as long as it's not malice, then you don't go to jail.
Gotcha. So how do you pick the right tax person? Like, are there questions what questions can you ask? Because I've noticed a lot of tax, now you could be a multi-level marketing tax business now. And so, right, I can pay some fees and become a tax professional. I mean,
Yes.
say that I'm a tax professional. So what questions would you say? How do you pick somebody to trust with? I think
With
this is
your,
probably the one of the most important things to
it
pick
really
somebody
is.
for.
I
So how do
always
you
tell
pick
people
someone?
it has to be somebody that you're comfortable getting naked in front of, because really you have to expose everything for you to get the best outcome.
Yeah.
Um, I would ask, like, what is your specialty? How long have you been in business? Can you give me 3 clients of yours that I can
Oh, that's a
contact
good
now?
one.
Yes. So just, and people have done that to me, and I'm like, oh, yeah, sure, you can contact them. But I always ask my clients first, were you comfortable with me sharing your contact information? And they'll, of course, say yes. Um, But you do have to be comfortable. And if there's something in particular, most tax professionals will have a consultation call that you can talk to them before you actually go into business with them.
Okay.
And if you get a bad, I mean, trust your gut. If you get a good vibe or a bad vibe, either go with whatever
Yeah.
your body is telling you to go with.
Well, sometimes you don't even know what questions to ask. So a
Right.
person can be a very good salesperson, but that doesn't necessarily
True.
mean that they've had proper training because this is serious.
It
I
is.
mean, I
Well,
tried. I couldn't figure it out. I mean, I know how to do enough to input some stuff, but it's just way too much that you
right.
have to know ongoing. It's kind of like me teaching somebody credit repair. I can't really teach you what I know because I've been doing this for so long. So
Right.
there's so much, there's some stuff that was in the book, but most of this was what I learned along the
Along the
way. And I
way.
think that
Yes.
taxes are the same way. You can't just come into this year and know what was happening.
Right.
You just can't. So to get into this, I don't know
I would
how you
just,
would.
yeah, just be very transparent. Like whatever question you want to ask,
Yeah,
ask that. I when I work with clients, I give them like a tax template because I know there are so many things that they've heard and they want to know, is it applicable to them and how do they
right.
implement it in their business? So I give them something, I call it a template, but where it's a spreadsheet and it's questions to ask my accountant. And then what are the answers? And then are there notes or follow up or action steps to go with that? Because even when I'm preparing taxes for my clients now that I've been preparing for years, every year they have something different.
Right.
And so that they have a place to go and it's not lost in email, I started sharing a template with them so that, okay, you have a centralized place where we have all your documents, we have all your questions, we have the answers, we have the back and forth
Yeah.
that we've gone through this tax season, so we can refer back to this for next year or in the future, like halfway through the year. I like for my clients to talk to me like June and
Yeah.
October and November before the year ends, because once the year ends, there's not a whole lot you can do. There's still some things you can do, but it's more effective if you're working on it, especially as a business owner, if you're working on your
Yeah.
tax plan all year. Like, don't
Gotcha.
withdraw $75,000 from your IRA without talking to me first.
Right.
Yes.
Good. So so now I think the important thing to talk about are businesses. We had an interesting conversation right before this started where I asked you
Yes.
about well, I call him Trump. A lot of people call him 45. But
Yeah.
anyway, the 45 Biden plan. And so one of the things, I don't know much about taxes, but one of the things I know about businesses and finances is that businesses will adjust to not affect their bottom line. So it doesn't matter what codes or what laws or whatever come out, businesses, especially the big businesses, are going to figure out how to get through these loopholes to make sure these things happen. So what was the differences or some of the differences that you know of so far between the Biden and Trump slash 45
We'll say
tax
Trump. We'll
plan?
just go with Trump.
Huh?
So when Trump came in, he decreased the taxes for the corporations.
Hmm.
And the reason he does that is because it's good for business. If corporations don't have to pay $1 million in taxes at the end of the year, they're going to take that million in tax savings and funnel it back into their business. Whether that's bonuses for their employees, whether that's putting money into their retirement plan, whether that's opening another business or opening another branch, hiring more employees. And so when that is why Republicans typically like to give tax breaks to the businesses because it trickles down into the economy. And so you will
Yeah.
start to see the economy grow when the big corporations are um, given the tax breaks. Not only do they um, help the economy, but they also fund some of like they can give more money to charities, to nonprofits.
Yeah.
So that builds up the communities, and then the communities are thriving. Um, say they're giving money to a nonprofit that helps women who used to be on drugs become better parents or get rehabbed or whatever. Well, then those women can become viable citizens that work a job, they get off of the system, and so then their children and their communities grow from that, all from the corporations being able to give money to that nonprofit.
Right.
So when Biden, I saw on the news yesterday, he said that he is going to raise the tax for businesses and corporations. People are not in favor of that.
Yeah.
Jeff Bezos got a lot of slack from, I guess a couple of years ago where he made hundreds of billions of dollars and he didn't pay any federal income tax. But
Yeah.
Jeff Bezos also has a commercial where they're going to be having these vehicles that are going to eliminate the emissions going into the pollution. So
Yeah.
then that betters our community because we don't have all the poison. But he also builds additional distribution centers into low income communities. And then that makes their communities grow. And then those families, it trickles down to
Yeah.
those families. And then they can move out of the impoverished, the poverty. And so that's the reason that the big businesses get the big tax breaks.
Right.
And we get upset with that. But what I wish that we as business owners would realize is that we're the same as them. We can use a lot of those same tax breaks in our business. And if you look
Right.
at it like the cake and cupcake analogy, it's all the same ingredients, it's just on a smaller scale. So
Right.
we
We
can
just don't
use
know
some
how
of
to
our,
utilize it,
yes, that's
and we
right. We
get
don't know how to
upset.
utilize it and implement it so that we can
Right.
enrich our families and our communities, which is
Because
what it's meant to do.
you told me something. You gave me a little trick that that is used by other communities. Explain that again. Do you remember what you were talking about? You asked if my kids played any sports or did any extracurricular activities in a way
Yes.
that I can get that paid for?
Yes. So,
Or
what they typically do, other communities, um, if you are a sole proprietor or an LLC, you can hire your children in your business. And what that does is when you hire your children under the age of 18, you can elect to not pay Social Security and Medicare tax on, which is the payroll taxes. So basically, if you paid
okay,
them $1,000 a month, they would receive $1,000 a month and you don't have to pay the
okay,
taxes on it. Now, you would still have to file the payroll tax forms quarterly, but those taxes are excluded and you don't pay federal income tax or state income tax on those children of the business owner. You can put that money into a bank account for your child, and if they play extracurricular activities like baseball, my son dances, which is an extreme amount of money
oh yeah,
every month,
yeah.
then you can use the money that they earned working in your business to pay for your extracurricular activities. And that way it circles back into your household. But also, I would have the child actually do work in my business because when you
Right.
teach them how to work and that they're earning money, I mean, and it doesn't necessarily have to be their extracurricular activities. It's their money. They can use it however their parents say they can. So if they want a new pair of Jordans, if they want the PS5, they have the money to pay for it. But they earned
So
it by working through your business.
so how is it beneficial again? Because I then file it as a deduction of my
Because
tax at the end of
you
the
have
year.
payroll expense. You still have like if you pay them $10,000 in a year, that's $10,000 in tax deductions that you write off in your business.
Gotcha, gotcha, gotcha. That was the part
And
I was missing
yes,
before. I'm like, how does this? So, how do people usually set this up? Like, do you have to use a payroll company like Intuit or something like that, or how would you do that?
yes, you do, and you can run their payroll companies that just kind of house the payroll for you, and
Okay,
you can go in there, set it up. You have to pay a monthly fee, either Intuit payroll or Sure payroll, and a lot of people like Gusto. So you would set that up, and then you would run the payroll through them, and it doesn't have to be the same amount every month. It doesn't have to be but you just have to using a payroll software will automatically generate the payroll tax forms for you so that when it's time to file the payroll tax, is the forms are already there. You just have to hit submit. Oh, I think we might be close.
Ooh, can you hear me?
I can now.
Okay, we back. I'm not sure what that was, but okay. I'm back.
Okay, so do you want me to repeat
Okay,
that?
you were, let's see where we stopped. We were talking about the deduction. At the end of the year, we can file it as a deduction.
Yes. So
Okay.
if you're a Schedule C filer, I think it says wages like kind of far down on the tax return, on the tax form. And so you
Hmm.
would just type in $10,000 or $12,000 or whatever you paid your child. And payroll taxes, you won't have anything because you didn't withhold anything.
Okay, so the biggest thing is you have to have some type of software. I know
Yes.
you said you do this, you set it up. So do you do
Yes.
all of that, or you still use a software program as well?
I still use a software program. It's just
Okay.
that you have to know what boxes to check in order to exempt them from the Social Security and Medicare
Okay, so
withholding.
that's why we need the
Yes.
professional. Okay,
Yes.
so, well, I think, can you think of anything that we missed? Because I mean, that we probably need to talk about, or something that I always ask people, what's that one thing that you wish people knew when they were coming to you or before they came to you?
Okay.
What's that one or two things that you wish people knew to be more prepared for this?
I wish that business owners would understand that bookkeeping is not optional. It is a must. Updated bookkeeping is a must. You have to have a record of all of your transactions in your business. And even if you use your personal account to make some business purchases, you need to know how to pull those in a simple, easy way at tax time to in order to share with your accountant. And then
Gotcha.
I also wish that they would have an electronic document storage system for their records. And it's
Yeah.
as simple as having an iPhone and using the notes feature to scan the document and then just renaming it, like
Okay.
FOIA 2020 W-2.
Okay.
Yeah, so,
Oh, one other thing I thought about.
okay.
What's the difference between a tax credit and a tax deduction?
Okay, so a tax deduction reduces the amount of your taxable income. So let's say if you have $50,000 and you have $20,000 in tax deductions. So then that is just 50,000 minus 20. Now you have $30,000 and then you're going to be taxed on the 30, not the 50. And
Okay.
let's say just for kicks and giggles, your tax rate is 20%. So 20% of 30,000 is $6,000. So
Okay.
that's how much you're going to owe. Now, if you had $50,000 in revenue, and let's say you had the same 20% your tax rate is still 20%. So then that means you're going to owe $10,000 in taxes. Does it make sense? So
Yeah.
50 times 20, 50,000 times 20% is 10,000. But if you have say, what did I use before? $20,000
Yeah.
deduction. If you had a $20,000 tax credit, instead of owing 10, you're going to receive 10 because you have 20. It's just like a store credit.
Okay.
You can go into the store, and if you have a store credit, it goes directly against the bill. If you have a deduction, it just lowers the amount that you're taxed on, but you still have to pay the tax.
Okay. All right. Well, I think that's it. Anything else you want to add that we need
No, I don't. I
to
just love talking about taxes. I'll just say, if you haven't filed, get with a professional accountant. There's a difference between a tax preparer and a tax accountant. A
know? Okay.
tax preparer is probably, I would say, like H&R Block, Jackson Hewitt, those types of businesses are preparers. A tax
Okay.
accountant is more of a professional. They went to school for it. They have a degree. They know all things tax code, or if they don't, they know where to go and get the answer.
Okay. So
And
that's important.
yes, in
But that's probably also
2021,
expensive.
yes, I would love to see people have a tax strategy, which before the year ends is where the gold is.
Okay.
Yes.
All right. So how do people get in touch with you? Anyone
So
who wants to work with you?
I am at Newer Books on Instagram most actively. I do have a Facebook page, but I'm not that active there. So it's
Okay.
Newer like entrepreneur, and then books like bookkeeping with an
Okay.
app. And then my website is the same, newerbooks.com. So if you want to work with me, I have a work with me questionnaire. So you can just go to the website, fill that out, and I'll be in touch.
All right. And after this uh, ends, you can go to under the video on my page and type your contact information in so people can find you.
Okay.
And then I'll just copy it over to all the other places where this video will play.
Awesome.
So
Thank you so
thank
much for
you so
having
much.
me, Toya.
I know you were busy, so thank you for stopping in your busy schedule and coming on to chat with us about taxes.
Oh,
Fun, fun,
yes.
fun.
Yes, I hope I answered your questions.
You did, and I will definitely be in touch with you.
All
Thank you
right.
so much.
You're welcome so
All
much.
right,
Thank you.
everyone. We're gone. Talk to you soon. Bye bye.
Bye.